Can you invest in Mirae Asset Nifty Financial Services ETF? One more ETF from Mirae Asset, and this time in India, because earlier we had seen this Mirae Asset ETF based on foreign fund of fund investing in FANG stocks, mostly in top 10 FANG stocks in US. Okay, now we are seeing Mirae Asset coming up with ETF on financial services industry. That's a new ETF, the first in India, we can say. How it is going to perform and what are the constituents of this and futures, products, benefits, everything we are going to see today. Hi, hello, this is Ganesh Through your stock market profit coach and author of the book One Page Stock Market Plan. And today I'm just going to speak about this Mirae Asset Nifty Financial Services Index and more about this. Okay, so the first point what you're going to see is the Nifty NFO period is from July 22nd to 29th. So it's already 26th July we are in, and 3 more days. Can you invest in this Mirae Asset NFO? Obviously, I'm just going to say towards the end of the video. So probably let's go and get into the futures. What this ETF is all about and what and all it's done. So what they are going to track is Nifty Financial Services Index, which includes banks, insurance, and home finance companies, AMCs. AMC in the sense asset management companies like HDFC, which is in the market, UTI, which got recently. Everything related to financial services will be part of this ETF, right? So let's look at some of the data available in the product brochure of this company, of this Mirae Asset ETF. If you look at based on the nominal GDP and just look at the way the Nifty 50 index has performed, which is at the bottom blue color, which is around 10,000, whereas Nifty Bank index has performed better up to 1,400. And if you look at Nifty Financial Services Index, it has went up to close to 1,800 and above, which means in the last 15-16 years, this fund, this based on this tracking, it looks financial services industry has performed a lot in the last 16-17 years. From 2003, India's GDP started performing, almost touching $1 trillion and becoming $2 trillion by 2014. What it says is that everybody are brought under banking system, right? That is the most essential part of it. Banking system in the sense opening a bank account, that is the first step. Now many bank accounts got opened because of Jan Dhan Yojana, which started after the BJP came into power, because of Aadhaar, which came into because of the UPA government. So all these are things which have been working along for the from 2004. And there is another set of data like the income of people has started improving after the growth entry of IT sectors, which started booming in India, and along with related industries, infrastructure, and everything put together, right? So this is the first data, and just look at the market penetration. The credit to GDP is just poor compared to Brazil, South Africa, and just look at the developed countries like China, which is far developed compared to India, and USA, it's very far developed, and China's leap bounded like anything compared to USA itself. And just look at UK, which is around 164, whereas credit to GDP in India is just 56. Whereas the mortgage penetration, the number of people who have taken mortgage is just 12.4, which is lowest among all the countries mentioned here. And life insurance premium, which is around 2.7, and the average in the world is around 3.3, which means there is a huge scope for life insurance to go up. And remember, this 3.3 across the world is based on various levels of insurance penetration. Whereas in India, even if it is a 0.5% increase, that is going to be huge. And the number of people who are going to age is going to increase, and the person who is taking insurance at the age of 25 or 30 is he's going to pay the premium for the company till he become maybe till 60, 70, or 80, and it's going to be a huge opportunity for any insurance company which is getting listed. And mutual fund AUM to GDP, just look at 12% in the case of India, whereas for across the world, USA just look at 121% compared to China, which is around 13. China and India very poor in terms of mutual fund investments, whereas Brazil, South Africa has done fairly better, far better. And remember that 48% in South Africa, if we are able to achieve it, is going to be huge. That 121% in USA, if we are able to achieve, that is going to be magnanimous, huge. So all these, what it says is that the penetration is very less for all the financial services company, NBFCs for example, the gold loan related companies, and also asset management, life insurance, everything related to small finance banks. It's going to improve from now on, and that is a huge opportunity even if you are investing right now, right? And just look at the average rolling returns of these companies and the first 3 years investment horizon and 1 year. Whereas Nifty has given not more than 10 to 13 in the last 1 year to 15 years average, whereas Nifty Bank Index has given 16.9%, which is 17% in the last 15 years. And in this, and if you compare it with Nifty Financial Services Index, which this Mirae asset is going to invest. This ETF is given 18.6%, almost close to 1.7% extra when you consider 3 years rolling period. So it means that if you are staying invested for 3 years, on an average you will be getting around 18.6% in the case of Mirae Asset Financial Services ETF. So which is very very huge, right? And finally, the last point is where they are going to invest in this. Just look at the industry. Private sector banks forms 57%, housing finance 16.7%. They form the majority, and NBFC, public sector, life insurance, general insurance, financial services, other financial services, asset management companies forms the rest of the things. And these are the top 20 companies. And if you look at these top 20 companies can change and once in a semi-annual basis, and that is going to be performed based on the free float market capitalization. Based on that, they are going to change this index, and that is going to change the returns aspect once in 6 months also. So this is a passive investment, right? And if you look at the future prospects of this industry, this banking financial services industry, if you look at low NPS in the last 2 3 years, and COVID may have a small impact, but let's look at the future next 5 years or so. Because if you are planning to invest in this ETF, it is going to be minimum 5 plus years. And ICICI Banking and Financial Services, which was launched way back in I think 2000 or something, the index, the expense ratio is just around 1.94%, which is just under 2%. Whereas this fund is going to be around 1% maximum. And in case of tier 2, tier 3 cities, they can be 0.3% extra. If you are from tier 2, tier 3, they can charge you 1.3% max. This is the regular plan. Okay. And in case if you are opting for direct, it may even come down a bit. Okay. And in case if you're looking at tracking error, which will come only after tracking the index after it has been launched, the index, it may vary from 0.3% to close to 1% also, 0.85%. That is the average industrial tracking error we had seen. So when you include Mirae Asset Financial Services index, if the index is say giving around 50% and this fund is giving around 48.9%, it means the tracking error is 1.1% or 0.5%. That is the difference. So putting expenses and tracking error put together, it may not go beyond 1 to 1.5%, and that is a normal direct fund expenses of ICICI Prudential Banking and Financial Services a fund. That is a mutual fund they are going to give. So if you look at this ETF, it's passive. You can relax. You can stay invested. Minimum 5 plus years. Consider this fund for your retirement, because 18% is not is very easy. It's not very easy, and they are going to give you almost for 15 or 20 years down the line, which is a huge returns in this time period. So if you're a fan of index funds, please go for it, and you can stay invested for longer period. Lump sum, yes, you can do, but have a tenor of 3 to 5 years. And even if you're going for SIP, minimum 5 years as usual. And the expense ratio, as it is ETF, is going to be around 1%. So can you invest? Yes, you can, if you have a long-term perspective. And if you're not even invested in any of the ETF or any of the mutual fund, please go for it. Start your SIP. Thank you so much for watching. Please share this video with your friends who has not invested in mutual fund, who wants to start with an ETF. This is one of the best fund to start. Thank you so much for watching.